From The Times and The Sunday Times, this is The Story. I'm Luke Jones. Before we start, we should maybe add the disclaimer that the value of Mahin Khan's investment advice can go up as well as down.
Mainly down.
Yes.
And I'm not in the business of giving investment advice. Massive caveat.
Yet. We're going to talk about gold. So you have committed it to the pages of His Majesty's Times that you have been a gold skeptic. For what reason?
Well, we should probably start by saying that in 2024, did I ever think I'd be writing or thinking about gold? No. It's a bit like talking about floppy disks or fax machine or bartering. It's just something that we're supposed to have moved on from. And yet, part of the reason I wrote the piece is that gold is coming back with vengeance.
Not just with investors, but with central banks as well. China in particular. Why though? What's fueling this unusual shift? The story today: why the world is buying gold.
My name's Mahin Khan and I'm the economics editor at The Times.
Tell me about your sniffiness. Where did that come from?
I'm a millennial, right? So, I never thought I'd be writing about gold as an economics editor because I'm not the economics editor of The Times in 1755, right? It's 2024. So the sniffiness comes from the fact that there is a constituency of people called gold bugs, and we can maybe talk about that. It's a bit of a derogatory term. But they're people that are always banging on about why the financial system's going to melt down and we can't trust our governments, we can't trust central banks. So the only thing that we need to go back to is gold because it's real and it has a value. And when we got rid of the things like the gold standard, that's when everything went haywire in modern finance. And I guess because there's such a vocal tribe that exists in the economic sphere and in the financial world, I've just thought, oh my God, these guys are just a little swivel-eyed mad people and I don't want anything to do with it.
But there's not just those people. There's also, especially thinking about like Southeast Asian communities, there's like a sort of heritage aspect to gold and a sort of respect of having it. And it's a sort of, it's a good cushion to have should you need.
Assiduous listeners will notice that I have a South Asian name because I am indeed also South Asian and I'm also Muslim. So I have a cultural and a religious background where gold is very central to ideas of wealth and passing wealth down and where to store wealth. So South Asian culture, traditionally, gold is an incredible, lucrative gift that is given to brides at their weddings to adorn yourself with gold. Islamically, a wife's gold is part of her financial freedom from her husband. It's something that in case anything goes wrong in a marriage, she could sell. It has a value. It's fungible. So gold is, one piece of gold is the same as the other piece of gold depending on how much it weighs. So in that sense, I have actually grown up culturally understanding the value of gold, literally and metaphorically. However, we have to distinguish that from what the piece was about and what I do in my day job, which is about thinking about the role of gold in the monetary system and in the financial system, rather than something that is useful for people to have as a diversified portfolio of assets. And so it's the monetary part that I've been more skeptical of. So why should gold be a feature of our monetary system? It was in the 18th, 19th and early 20th century. Then we got rid of it. I don't think it particularly causes any problems. But now it's back in a different sort of way because actually it's our central banks, our modern central banks in the 21st century, they're buying up gold, which is why it sort of led me to rethink, does gold still have a role in the monetary system in the 21st century?
Take us into that rethink then. What have you seen recently that has made you ponder this?
Well, since 2022, when Russia invaded Ukraine, there's been a massive upsurge of central banks buying gold to store in their vaults. And these are central banks mainly outside of Europe, so led by countries like China, Turkey. You could say in some senses non-aligned countries because they think and they saw after Russia's invasion of Ukraine, one of the most important things that happened was the US and European countries united to impose very punishing financial sanctions on Russia.
Today, in concert with our allies, we will agree a massive package of economic sanctions designed in time to hobble the Russian economy.
The Prime Minister's new 10-point package of sanctions includes a freeze on the assets of 100 super-rich oligarchs and military businesses, a freeze on the assets of more banks, including the second biggest VTB, a ban on the sale to Russia of high-tech equipment and kit useful to their oil and gas industry, a ban on the sale of dual-use equipment that could have...
And this included basically cutting Russia out of the dollarized financial system.
It wasn't just impounding yachts, it was like getting to the very core of things.
It was actually impounding your central bank reserves, so putting a freeze on these billions and vast billions that Putin had amassed as foreign exchange reserves.
And those foreign exchange reserves, so they were dollars, basically.
Yes, a lot of them were dollars, they were in other countries, but if you're part of the dollarized financial system, which de facto you just have to be, if you operate in the 21st century, you're exposed to the whims of the hegemon, in this case the US, and it has ultimate control over use of the dollar, who can and can't use it. So we've known over time, countries like Venezuela, I think the Afghans for a while under the Taliban, and now China and other countries are thinking, well, we're at risk of potentially being the baddies. So we need to protect our financial assets, our foreign exchange reserves, our ability to manage our own currencies. So we're going to start buying up gold, because gold is not controlled by the US. Gold is difficult to monitor. It's difficult to know where gold reserves are. The US can't impose sanctions on the use of gold. So it's actually going back to the system of using gold as a form of exchange and part of a monetary system, but in this sense, to defend yourself against potentially aggressive financial sanctions from the West and the US. So then I thought, okay, this is very different to how we've thought about gold before.
Yes, and it's also become a more attractive investment in a more unstable world.
When people want it, the price goes up. It's just like any other commodity. So the price of gold has been hitting fresh records this summer. Right now, it's sitting about $2,500 an ounce.
An ounce?
An ounce. And the only way is up, right? So let's be honest. Gold, there's a finite supply of gold, right? We've dug some from the ground. There may be new reserves discovered soon, but there's only a certain amount of gold in the world. So people think this is a good investment. I got to get in because the only way is up. And to be honest, it looks like they're right. So I quoted in the piece some figures from big investment banks saying that it could go to 2,800. It's probably going to hit 3,000 next year.
And that's not just because retail investors are thinking, oh, the world looks a bit scary at the moment. Let's put our money into something safe, gold. It's because the price is going up and up and up more so than it has before, because all of a sudden central banks are back in on the game.
Big buyers. Central banks buy tons of the stuff, quite literally. So, people have always been attracted by gold. So when inflation is high, people think, well, the value of my money, my bank is eroding. I need to put it into something that has value. So often it's houses, it's often gold. We're seeing a shift. This is not just about people panicking about inflation or central banks. This is the central banks themselves trying to protect themselves against financial warfare.
Yes. And so what is the value of it to me or a bigger investor? I mean, how big a game can you get in on here?
Gold is as valuable as you want it to be. For some people, it is the most valuable of all the precious metals because it carries, as we said, a significance that is just beyond looking nice. Human beings have always thought there's something intrinsic about gold because of the shininess, really, right? We don't look at palladium or platinum in the same way that we think about gold, the luster, right? Just the color of it. It's always seemed to have done something to people's brains. It sends some people mad. We think it's inherently beautiful. Most cultures do. So in that sense, the value has always been non-monetary in some sense, right? But now the value of gold is invaluable to a lot of these countries. If you think about China, Russia, Iran, even Venezuela, you are buying gold to protect your country from economic warfare. There's really good examples of this already happening. Hugo Chavez, the leftist autocrat of Venezuela, was buying gold before it was fashionable because he realized the risk that Venezuela was under because it was constantly under financial sanctions. His problem was that he didn't have the gold on his soil. It was actually on British soil. So he was storing it in vaults in the UK.
Big mistake.
It was because there was a massive court case about whether or not this gold is able to be repatriated. So it's a very kind of shady world where central banks have vaults full of gold bars. They are the keepers of the gold. And we don't really know where all of this stuff is and how it trades between themselves. And there are legal rights over it. But if you're so scared about being part of the dollar system because you're vulnerable, then gold is basically, right now, the only real alternative to protect yourself from that kind of financial warfare.
And the big banks are talking about this and suggesting it's something that people should get in on.
Yeah, so I'm not the only one to sort of have broken my snobbiness about gold, because Goldman Sachs, don't think any relation of gold, they are putting out notes saying that in a world of geopolitical and financial uncertainty, gold's a pretty good bet. That's why they're predicting the price is going to go up. They think that this buying that we've seen since 2022 is not temporary. And so there's actually a rush for gold.
Mahin Khan, economics editor for The Times circa 1787, is taking us through gold and why it's the thing that not just investors are investing in, but also central banks increasingly as well. But, Mehreen, it is something that we have been obsessed with, and the value of it we've been obsessed with for ages. I mean, going all the way back to, well, most obviously, King Midas is a good example.
King Midas, OG of gold, really ruined his life, that guy.
Yeah, it's probably not the best analogy for this.
Maybe not. Actually, that's true. Let's think about how human beings have thought about gold. Since the beginning of time, since we understood that we were humans who in society. So I'm thinking back to even the ancient Egyptians were digging up gold and using gold as a form of trade. The ancient Babylonian civilization were probably the first on record to use gold coinage. So they really understood that if you want to buy and sell stuff, then why don't you use gold as a means of exchange?
And that was at a time where, not like in the times we live in at the moment, where a penny is worth way more than actually a penny. That was a time where the value of the coin was in the value of the coin.
Was it in the value of the metal itself? So the tangibility of gold is something that human beings have always been drawn to because it gives you some sense of safety. As I said, 1 gram of gold or 1 ounce of gold is always 1 ounce of gold. You can melt it down, turn it into whatever you want, but ultimately you still have the value of that gold. If we think about sterling, which is the name for the UK's currency, the pound, sterling comes from sterling silver because that's how Britain developed its coinage system. So for many countries up until the mid-19th century were on a bimetallic monetary system. So silver and gold were the 2 metals that were undergirding people's coinage. And effectively what it meant was that if you have a note, a coin or a banknote as we call them today, you could go into a bank and you could ultimately say, I have £50 and I want to convert that directly into the equivalent value of gold or sterling. So
and
it's a direct...
give you the gold or sterling?
Exactly, yeah. That's exactly how it worked.
Because the notes, well, as we know, when you're bored and you read it, it's a sort of IOU, I promise to pay the bearer on demand, whatever the sum of. It's not actually the value in the note.
Exactly. And that value was metals. It was metals. So there was a direct convertibility of money into gold and silver for a long time. After the mid-19th century, when there was a massive gold rush in the US, where gold was popping out of the West Coast and there was a massive rush for gold in states like California, then we changed from the silver and gold to just gold itself. And that's what people talk about when they talk about the gold standard.
And that is why, I guess, gold has so infected not just what we were talking about earlier in terms of, the cultural significance of gold, but our idea of money.
Yes.
In that there is no bank heist more alluring than one that involves gold bricks being stolen. CC, the Italian job, and the rest.
Of course.
3, 2, 1, go! You're only supposed to blow the bloody doors off.
That's why it's so central to how when people think about what money is, we think of the shiny coins. And we think actually the shiny coins in and of themselves are worth something. But they really used to be just backed by gold. This worked for a long time for lots of countries during industrial revolutions like the UK had. It helped increase trade because when you're trading with a trading partner, and their currency is based on gold, and your currency is based on gold, it creates a certain amount of certainty that both of you are using coinage that is intrinsically backed by something. So there's no incentive for you to go and inflate your currency, to print more of some stuff, to devalue it. It always goes back to what the value of gold is, and you both agree on what that is. So it facilitated a lot of trade in the 18th and 19th century until it didn't. And then it all broke apart.
Why didn't it?
So we had something called World War I happen. And at that point, countries had to basically print loads of money to borrow to fund the war effort. So countries decided that we're going to temporarily delink our currencies from gold. After the war, The UK, France, Italy, the US, Canada all decided to get back onto the gold standard to re-establish stability, monetary stability. However, that process of coming back onto gold was very disruptive because lots of countries were going back to the gold standard with either an overvalued currency or an undervalued currency, which is a problem that a certain chancellor called Winston Churchill had in the UK because he was the finance minister at the time. The pound was about 10% overvalued after the First World War. And in the gold standard, to make it work, everyone has to decide that they're going to cooperate together. If one country is hoarding gold, it forces deflation on another country. Deflation is very painful. It means that workers have to cut their wages. It means the value of your debt inflates, which is not good for borrowers. And we ended up in a system in the interwar period where the gold system was really strangulating economies, and it probably made things like the Great Depression, which happened with the stock market crash in 1928, much worse, because when the stock market crash happened in the US's job was to raise interest rates quite quickly because they wanted to make sure gold was not going to escape the US economy. And by doing so, they almost propagated a massive deflationary impulse to other countries in Europe. And it kind of helped make the Great Depression not just a US phenomena, but a world phenomena. And that was kind of done through the channel of the monetary system, which was gold of the day. And it became untenable. The US had to leave. Winston Churchill took the UK out of the gold standard. And from that point onwards, we started thinking that gold, how do we really work with it in a way where our economies don't suffer because we're part of this monetary system, which means that we're focused more on how much gold we have rather than where inflation is or how to boost growth or make sure workers have got jobs and all of the massive post-war economic challenges of the day. And gold was just seen to be a bit of a distraction from that political necessity to stabilize societies after the war.
Yes. And how did that train of thought last then in the decades that came?
So then we had another war. The Second World War happens between 1939 and 1945. In that period, again, countries have to borrow loads of money to fund their war effort. So again, we've forgotten about gold because we just got to do what we got to do, raise cash to fund a war effort. But what happens is we end up with a situation where it's a halfway house. After the war, something called the Bretton Woods system is established. And this is where the big allied countries, this time including Germany, which has lost the war, decide that, okay, the gold standard, the real one, the one where we basically just go to the banks and you can get gold, it wasn't working for us. But maybe we don't need to get rid of gold altogether, right? So rather than making gold central to our monetary system, it was made central to how the US operated the dollar. And so the Bretton Woods system was a system by which if you carried or held the US dollar, you could go to a bank and exchange that directly for gold. But you could only do that if you held a US dollar. So other currencies like the pound, in Italy, the lira, in France, the franc, in Germany, the mark, they were all linked to the dollar, and the dollar was linked to gold. So we have a slightly arm's length relationship with gold. Gold is still there, but it's a dollar system.
It cements the dollar as the big boss.
Yes. And it worked for a little bit until it didn't. And I think the most important post-war economic event in the world was the decision by a certain Richard Nixon in 1971 to decide that the Bretton Woods system, this dollar linking of gold, wasn't working for the US, and he severed that connection.
Why wasn't it working?
Very good question. So the US itself was going through some period of economic strain. It was borrowing a lot to fund the Vietnam War effort. And two other economies were becoming more dominant in that day. One is post-war Germany, the other one is post-war Japan. So the US's kind of relative dominance of the world economy is being challenged by these two other economies. And basically, because anyone who held the dollar, including German banks, Japanese banks, British retailers, anyone who held dollars can go and get a piece of gold for that dollar. And the US just did not have enough gold to make that work. They ran out of gold. So in that sense, the Bretton Woods system was bad for the US, and it was the US that made a unilateral decision under Richard Nixon in 1971 to decide that they were going to sever the link. In his words, he gives this very emotional TV address where he says, "We are shutting the gold window. You can now no longer go to your bank, hand in a dollar, and get a piece of gold."
The strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
Which left us with what kind of a system then?
The current system, the current system, which is known as the system of fiat currencies. So you mentioned before
Nothing to do with cars.
No, it isn't nothing to do with cars. No, you don't get a fiat for every dollar that you hold.
Free fiat punto for every dollar.
Fiat refers to the fact that there is nothing really backing our monetary system apart from this other quite important thing called trust. So you said before that a banknote is an IOU saying a promise to bear, the holder of this money will receive whatever. But in a world of fiat currencies, you're not getting gold. You're just trusting in the fact that your money is worth what it is because the people whose job it is to print it will always protect the value of that money. And fiat, even the term fiat currency has become a kind of slur. It's become a dirty word in the 21st century because people refer to the idea of fiat currencies as baseless currencies. Baseless, almost quite literally. They're worth nothing. However, there have been some ups and downs, but we have managed for the last half a century or so to have fiat currencies where people do relatively have trust in their financial institutions, particularly in the West. Global trade has exploded. Many, many economies have got rich from the current monetary system. And in this kind of new world, we don't need gold, right? It's literally a relic.
And yet, trust is now thinning.
Yes.
So that's where that unravels.
It unravels, and I think a lot of people will see, and I think I see the rise of crypto and blockchain as very much a frustration with fiat currencies. So something really important happened after the financial crisis, which is called quantitative easing, which is often called money printing. In some sense, it was money printing. Central banks around the world were so worried we'd go into a Great Depression, they flooded the financial system with cash. They made it really easy to borrow at almost zero interest rates because they wanted people to spend, they wanted companies to invest, they wanted you to hire people, they wanted you to go out shopping. And people thought, well, this thing, quantitative easing, money printing is terrible. If you print $5 million more, that devalues the dollar in my pocket. That's going to lead to inflation. It doesn't quite happen that way, but I think this idea that central banks basically are so in control of the money supply, they can do whatever they want, leads to this huge degree of skepticism, which ultimately ends up with the whole crypto, I don't want to call it a fad, a craze. The idea that we should have a rival system, a currency which is mined, so Bitcoin, for example, which cannot be manipulated by governments, by central banks or by authorities. And that's a manifestation of a distrust, which maybe in the 18th century, those people would be called gold bugs, but now they're crypto bros.
Yes, but now we're arguably moving then a step beyond that. And, you can shove your Bitcoin back up your blockchain because trust has got so frayed that actually the more we realise that Bitcoin itself has no inherent value, much like a banknote, gold is back. And we were talking earlier about how even central banks now, looking at what happened to the central bank in Russia and, as the Ukraine war played out, what can happen if you rely too much on the dollar and don't have actual physical gold backing you up. They're moving more and more towards that. How far can that go when we look into the future? I mean, how far could the return to gold on the sort of big economic scale go? It's
potentially endless. So the thing that gold probably doesn't give you, which Bitcoin and blockchain or cryptocurrencies do, is volatility, right? You've already mentioned. They can crash overnight and nobody really knows why. So if you want stability, tangibility, and shiny stuff, then Bitcoin is probably not going to be for you. You're probably still going to be attracted to the OG hedge against emergencies and volatility, which is gold.
Fungibility.
Fungibility is also very important, right?
Yes.
The direct transfer between one piece of gold is another piece of gold wherever you are in the world, whereas a lot of, can I call them shit coins? I guess that's actually what they're called. A lot of these things that exploded after, Bitcoin went to the moon, these were just nonsense currencies, people just trying to make a quick buck, right? So how far can gold go? I think it's here to stay. And there's a question about whether the world's hegemon, the US, is going to start picking up on the fact that a lot of the countries that might be potentially in its firing line are protecting themselves with gold. And can they do anything about it? It's going to become really important to find out where gold is, who the owners are, and whether the countries who have bought it to protect themselves have access to the gold when the US comes calling.
Yes.
Right? So this is a question about how Iran and Russia can trade with each other, how China can trade with Central Asian European countries. We've tried in the last 2 years to cut Russia out of the global financial and trading system, but guess what? They've just found ways to circumvent the rules. Gold is now becoming one of the ways that you can protect yourself and circumvent. Because if you're not allowed to use dollars, and there's no obvious other reserve currency in the world right now, that could change, we could talk about that, then gold is still something that you can use to barter, exchange, and to trade.
Yes, on the point of maybe a new future reserve currency, that's the interesting thing that's being toyed with, what the BRIC countries might do. Brazil, Russia, India, China.
So all these countries we've already spoken about, the guys buying all the gold. Well, they're buying gold as an insurance mechanism, but if they are really scared, why don't they just create their own currency? And they have been talking about it. For the last 18 months or so, there's been lots of rumors about something called the unit, which is usually how I would refer to
Sounds like a wrestler.
Yeah, a very strong, bulky man.
Yeah.
He looks like a unit,
Yeah.
that guy.
Stop looking at me.
He's built like a fridge. Yeah, sorry, Luke, should not be objectifying you like that. And among the things that this new currency could be based on, a basket of assets, one of them is gold. And that kind of makes sense. If you think about the kind of people that live in the global south and emerging markets, they already think the gold has an intrinsic value. They're already the retail customers that are attracted to gold as a hedge in emergency times. So why shouldn't the BRICS currency have some linkage to gold? Now, we're not going to go back to the system where it's a one-to-one, where you can hand in the unit and get a unit of gold. That's not going to happen. But there will be probably some sort of link. Now, the question about this currency, and I don't want to get people too excited because, if this happens, this is massive. If it does happen, it will take many, many years to evolve. Who uses this currency, how fungible this currency is, how liquid it is, how reliable it is, what its value is, what its exchange rate is with other currencies. These are all the things that determine whether a currency is used or not. And ultimately, the political stability and the economic success of the BRICS countries will probably decide whether the unit is a viable form of exchange that can rival the dollar.
And yet, even the fact it's being toyed with, though, is the important thing, isn't it? Because it's signalling a direction of travel.
Exactly. It's signaling, and it's the sign that we have a political world now where thinking of the US as a unipolar power is no longer sustainable as it was in the post-war era. The US has rivals to its authority, most notably China. So at the very least, we can say we're heading to a bipolar world. I don't want to say they are rivals to the dollar yet, because you have to achieve a lot of tick boxes to even get onto that level. But we're moving into a world where extricating yourself from the financial reach of the dollar is a good strategy for any country.
Yes, and that means, because what else is there? More gold. So to return us to your financial advice from the very top of the programme. Get in now.
Look, I've never told anyone to buy Bitcoin, and I've never really told anyone to go into crypto, right? Often I used to get that question, particularly around 2022 when this stuff was going to the moon, as I said.
But
let's put it this way. If I get married between now and whenever, and my family's like, here's a truckload of gold, I'm not going to say no. Whereas before, I'd be like, guys, it's not really my style. I don't really wear gold. It doesn't fit my vibe. But right now, I'll be like, yeah, I'll take it. The only way is up.
Mahin Khan, thank you. Mahin Khan, economics editor at The Times. You can read much more of Mehreen's insights into not just the economy here, but also the way the economy has divided voters in the United States as well at thetimes.com if you've got a subscription. The producer today was Branka Deladia, the executive producer was Fiona Leach, and sound design and theme composition was by Mao Lassetto. I'm Luke Jones. See you soon.